My dear trader, take a breath and settle into this moment. Because this moment, right here, is the moment you chose to become better than the trader you were yesterday. The moment you decided to master gold, to understand it with clarity, confidence, and skill, not hope. You didn't click on this video by accident. Somewhere inside you, there is a desire, a drive, a spark to grow, to improve, to learn, and to reach a level of consistency many traders will never taste. In the world of trading, consistency is the true gold, not the metal itself. Today, you begin a journey that thousands of struggling traders skip. Today, you're investing your time, your attention, and your energy into learning a skill that can transform your trading mindset forever. And for that, you deserve respect. This tutorial is not only about scalping gold. It's not only about entries, timing, sessions, or risk management. It's about shaping the mindset that turns a casual trader into a disciplined, structured, calm, high-probability trader. It's about helping beginners avoid the traps and guiding intermediate traders toward deeper mastery. But first, let me tell you something important. Before you master a strategy, before you learn the rules, before you understand timing or risk, you must understand yourself, your emotions, your strengths, your weaknesses, your habits, your reactions when money is on the line. Because the market does not reward the trader who knows everything. The market rewards the trader who controls themselves better than the crowd. So sit back, relax. Let your mind open. Let your curiosity grow. And let your confidence rise with every chapter we go through together. This is your time. This is your training. This is your path to becoming a more skilled, more disciplined, and more profitable trader. Now, let us begin. Let us step into Chapter 1. Understanding the nature, the personality, and the movement of gold. Before you learn entries, before you learn timing, before you learn setups, you must master the mindset of a scalper. Because scalping is not just a skill. It's a psychological environment. It's a mental game. It's a test of speed, clarity, discipline, and emotional control. Gold scalping is like working with fire. If your mind is calm, it warms you. If your mind is emotional, it burns you. What you are about to hear is one of the most important chapters in the entire video because mindset decides everything. 1. The power of quick, calm decisions. A scalper does not have hours to think. You don't have time to debate with yourself. You don't have time to doubt. You must make quick decisions. But calm decisions. Not rushed. Not emotional. Not fearful. This is the secret. Scalpers are fast in action but slow in emotion. Your mind stays calm even when the chart moves fast. Your breathing stays steady even when a candle spikes. Your judgment stays clear even when gold moves aggressively. A true scalper does not panic. A true scalper flows. 2. The ritual of preparation. Professional scalpers don't open the chart and start clicking. They prepare. Before you scalp gold, set a ritual. Review higher timeframe structure, 1 hour, 30-minute, and 15-minute. Identify trend direction. Mark your key zones, support, resistance, liquidity, imbalance. Check upcoming news. Decide your maximum risk for the session. Set your trading window, your active scalping hours. This ritual takes 5 to 10 minutes. But it saves you from hours of emotional mistakes. Because preparation creates confidence. And confidence removes fear. 3. The discipline of waiting. A scalper who cannot wait is a gambler. Waiting is not a weakness. It's a weapon. Gold will tempt you with small moves. Fake breakouts. Random candles. Small impulsive spikes. But a high-probability trader waits for structure breaks. Retests. Liquidity grabs. Momentum confirmation. Clear direction. Session volatility. Patience does not slow you down. Patience protects you. Patience is your shield. patience is your edge. Remember this truth. You do not get paid for trading more. You get paid for trading correctly. 4. Emotional detachment, winning without euphoria, losing without pain. One of the hardest skills in scalping is emotional separation. A beginner feels joy after a win and pain after a loss. A professional feels nothing. Not because they don't care, but because they know one trade means nothing. One win does not define you. One loss does not define you. A true scalper is emotionally neutral. When you win, you breathe and continue. When you lose, you breathe and continue. Neither affects your mental state. This is how you maintain consistency. This is how you protect your account. This is how you stay in the game long term. 5. Confidence through simplicity. The market rewards the trader who keeps things simple. Your confidence must come from understanding structure, following your rules, sticking to your plan, respecting your risk, taking only high-probability trades. Your confidence should never come from lucky wins, high lot sizes, impulsive trading, emotional decisions, chasing losses. A simple strategy followed with discipline beats a complicated strategy followed emotionally. As you learn this video, you will see something important. The world's best scalpers are not the smartest. They are not the fastest. They are not the most educated. They are the most consistent. They don't change their plan every week. They don't switch indicators every day. They don't try to beat the market. They understand the market, adapt to the market, and flow with the market. 6. The scalper's mindset in one sentence. If there is one sentence to tattoo into your trading soul, it is this: I wait for the market to come to me. I do not chase. This is the heart of a successful scalper. You wait for your zone, your setup, your structure, your confirmation, your timing, and only then, you act. Not before. Not after. Only when the probability is high. 7. Preparing your mind for the strategy ahead. Now that you understand the mental foundation, we can move into the technical side of scalping. But remember, your mindset is 70% of your success. Your strategy is only 30%. The chapters that follow will teach you how to identify high-probability gold setups, how to scalp safely and consistently, how to manage risk like a professional, how to time your entries based on market sessions, which traps to avoid, and how intermediate traders refine their skill, so they grow from good to excellent. You are building a new version of yourself. A more disciplined, more patient, more skilled trader. Now, take another breath. Clear your mind. We will move into Chapter 2, High-Probability Scalping Setups, Reading Gold Like a Professional. If you want to scalp gold with consistency, you must learn to see what most traders ignore. You must train your eyes to spot the high-probability setups hidden behind the noise. In this chapter, we walk slow, steady, and deeply through the setups that truly matter. Not every candle matters. Not every spike matters. Not every breakout matters. But structure matters. Liquidity matters. Momentum matters. Timing matters. When you combine these elements, you create a trading environment where the probability is higher than the risk. That is the goal of a scalper. 1. The foundation, market structure, the skeleton of gold. Before anything else, you must know. Gold respects structure beautifully. Market structure is the skeleton of the chart. It tells you where price is going, where price is slowing, where price is likely to reverse, where price wants to continue. As a scalper, focus on higher highs, higher lows in an uptrend, lower highs, lower lows in a downtrend, break of structure for momentum shift, retests for safe entries, liquidity sweeps for high probability reversals. The cleaner the structure, the safer the trade. Never scalp blindly. Trade with structure, not against it. 2. The golden scalping setup, break retest continuation. This is the most consistent and powerful scalping setup on gold. It works because gold respects momentum and retests almost every day. The setup flows like this. 1. Break of structure. Price breaks a previous high and low with strong momentum. 2. Retracement back into the zone. Price pulls back to the breakout point or imbalance zone. 3. Confirmation. A rejection candle, order block, or momentum shift. 4. Continuation. Price follows the original direction and completes the wave. This setup is high probability because it aligns. Trend direction. Market structure. Momentum. Smart money concepts. Session timing. Thousands of traders chase breakouts. Professionals wait for retests. The retest is where your confidence lives. The retest is where your clarity lives. The retest is where your probability is highest. You don't enter the breakout. You enter after the breakout. Because the market always gives a second chance. To the patient trader. 3. Liquidity sweeps, the secret behind reversals. If you want to understand gold deeply, remember this. Gold hunts liquidity before moving. This is why so many beginners lose. They enter too early. They enter too late. They enter emotionally. But professionals wait for something specific. A liquidity sweep. This happens when price breaks a recent high or low, triggers stop losses, grabs pending orders, and then reverses sharply. Liquidity sweeps show the end of a move and the beginning of the next one. Signs of a liquidity sweep. A long wick above a key level. Rejection candles. Sudden reversal after a fake breakout. Quick push into a liquidity zone during session open. When you see a liquidity grab, you prepare for a reversal or strong continuation. This setup is powerful because it aligns with market psychology. It tells you when the market has taken what it needs and is ready to move. 4. Imbalance fills, the scalper's hidden edge. Gold creates imbalances when it moves too fast. These are price areas where one side dominated the other. Orders were left unfilled. Price moved in a one-direction candle with little or no wick. The market often returns to these imbalance zones to fill them. As a scalper, this is a gift. Why? Because imbalance fills tell you where price is going, help you predict retracements, create high-probability entry zones, offer clear, tight stop-loss levels. This is one of the most reliable tools for short-term trading. 5. The pullback entry, the calm trader's setup. Not every trade needs to be aggressive. The pullback setup is for traders who prefer safety, clarity, control, low-stress entries. Here's how it works. 1. Identify the trend. 2. Wait for price to pull back to your zone. 3. Look for slowing candles. 4. Enter a rejection or continuation candle. This setup is perfect for beginners, traders who want high accuracy, scalpers who avoid emotional entries. It is not fast, but it is consistent. 6. Session-based scalping setups. Different sessions provide different setups. London session. Breakouts. Retests. Liquidity sweeps. London is powerful because it's where volume begins. New York session. Continuation moves. Strong reversals. High volatility. The New York session open is one of the strongest moments in gold. Asian session. Range trading. Rebounds. Consolidation breakouts. Each session requires a different mindset. You will learn more about timing in Chapter 3. 7. The high probability formula. If you combine these elements, trend, structure, breaks and retests, liquidity sweeps, imbalance fills, session timing, you will see something beautiful. High probability setups appear every single day. You do not need 20 trades per day. You need 2 to 3 good ones. And sometimes, only one. Gold is not a market for quantity. Gold is a market for quality. 8. The mindset behind every setup. Before entering any trade, ask yourself, is this high probability? If the answer is maybe, do not take the trade. If the answer is I think so, do not take the trade. If the answer is I hope so, do not take the trade. Only take trades when your mind, your rules, your structure, and your discipline say, yes, the probability is high. This is how you evolve from beginner to intermediate. This is how you build consistency. This is how you protect your capital. In the next chapter, we dive deeper into one of the most important elements in scalping. Timing. Because timing is half the strategy. A setup taken at the wrong time becomes low probability. A setup taken at the right time becomes high probability. You will learn the best times to scalp gold, the dangerous hours to avoid, how sessions influence your success, how traders destroy their accounts by trading at the wrong time, and how to build your perfect trading schedule. You can have the right strategy, the right setup, the right analysis, and still lose. If your timing is wrong. Timing is one of the most underestimated skills in gold scalping. Because gold is not consistent across the entire day. It has hours of opportunity. And hours of danger. A beginner trades anytime. An intermediate trader trades with awareness. A professional trades only when timing aligns with probability. Let's build that awareness inside you now. 1. Market sessions, the rhythm of the day. Gold behaves differently in each session. To master timing, understand these 3 major sessions. Asian session, Tokyo. Slow, controlled movement. Small ranges. Best for range-bound trades, if you know what you're doing. Not ideal for beginners. Asian session rarely gives explosive moves. It is a waiting zone. A time for planning, marking levels, and preparing. London session. This is where gold wakes up. London brings increased volatility, breakouts, liquidity hunts, fast directional moves, major structure shifts. London Open, first 30 to 60 minutes, is one of the highest probability windows for scalpers. London sets the direction of the day, or at least the direction of the next major wave. New York session. New York is where the real fire begins. New York session includes continuations of London trends, reversals, especially around New York session open, high volatility, strong impulses, news events. There are 2 major timings inside New York. 1. New York Open. Fast volatility, continuation or reversal. 2. New York Stock Exchange session open. One of the most explosive times for gold. Huge moves often start here. If you want powerful scalping moves, these 2 moments offer incredible opportunities. 2. The best times to trade gold. If you want consistency, focus on these windows. Highest probability windows. London Open. New York Session Open. New York Stock Exchange Open. These hours offer high liquidity, clean structure, momentum, volume, clear direction, beautiful scalping opportunities. Your accuracy improves simply by trading during these windows. Moderate probability windows. Late London session. Pre-New York. Early Asian session. You can trade here, but only if you understand structure deeply. Low probability windows. Late New York session. Mid to late Asian session. Times when volume is extremely low. These hours often create choppy moves, fake breakouts, no direction, small candles, low momentum. These are the hours that destroy beginner accounts. 3. Timing and probability work together. Here is a truth you must remember. A beautiful setup at the wrong time becomes a bad trade. A simple setup at the right time becomes a great trade. This is why timing can improve your win rate dramatically. Most traders lose not because the setup was wrong, but because the timing lacked volume, follow-through, or direction. Don't just ask, is the setup good? Ask also, is the timing good? 4. The danger hours, when not to trade. If you want longevity in trading, you must know when to avoid the market. Avoid trading when liquidity is low, sessions are transitioning, major news is coming, price is consolidating tightly, the market moves with tiny candles, your spreads are unusually high. The most dangerous periods are 3 to 4 hours after New York closes, middle of Asian session, 20 to 40 minutes before major news, random slow periods with no direction. You must treat these hours like a professional. When the probability is low, you walk away. This is how you protect your capital. This is how you keep your mind clear. This is how you survive long term. 5. The scalper's timing rule. Here is a timing rule to guide your entire trading career. Trade only when volume, direction, and structure align at the same moment. Not before. Not after. Only when they align. This one rule can eliminate impulsive trades, forced entries, emotional decisions, low probability setups, most of your losses. Professional traders wait for alignment. Beginners chase randomness. 6. How timing connects the structure. Timing helps you identify the beginning of a wave. Enter early with small stop losses. Avoid fake breakouts. Ride momentum. Catch volume-driven moves. Exit cleanly. For example, London Open is excellent for catching breaks and retests. New York Open is perfect for scalping continuations or reversals. New York Stock Exchange Open gives some of the cleanest impulsive moves. Timing tells you whether the market wants to move or whether it wants to sleep. And you must learn to trade the awake hours. 7. Your personal trading schedule, the key to consistency. Here is one of the most life-changing things a trader can do. Build your trading schedule. Choose one or two of the following: London Open, New York Open, New York Stock Exchange Open. Trade only during those hours. You will notice less stress, fewer trades, higher accuracy, more confidence, clearer structure, faster progress. Your brain performs better when it knows you trade at fixed times. This creates discipline. Discipline creates stability. Stability creates profitability. Next, we move into one of the most powerful parts of this lesson. The beginner's warnings, the 12 biggest mistakes new scalpers must avoid. This section will save accounts. It will save emotions. It will save months of unnecessary losses. How to avoid the traps that blow accounts. How to survive long term. How to grow steadily and safely. Before we begin, I want you to hear this with your whole mind. Most traders don't lose because of strategy. Most traders lose because of behavior. It's not the chart. It's not the market. It's not the broker. It's not the spread. It's the decisions. This chapter is the shield, the armor, the protection beginners never get until it is too late. But you are hearing it now, early, before damage, before emotional scars, before unnecessary losses. So listen carefully. These warnings are not negative. They are preservation. They are protection. They are survival. Let's begin. Mistake 1. Trading every candle. Beginner scalpers feel excitement. They feel energy. They feel the urge to click buy or sell. Every few minutes. Every little move. Every tiny opportunity. But gold doesn't reward activity. It rewards precision. A single good trade beats 10 emotional trades. The market doesn't pay you for effort. It pays you for patience. Mistake 2. No defined session to trade. Scalping gold requires structure. Many beginners randomly trade. A little in Asian. A little in London. A little in New York. Some at midnight. Some early morning. This destroys consistency. Professionals choose a session. Beginners chase the market. Pick one. Master one. Be loyal to one. Mistake 3. Entering on impulse, not confirmation. This mistake destroys accounts fast. A candle moves quickly, and beginners jump in. But speed does not equal direction. Momentum does not equal continuation. Let the candle close. Let structure confirm. Let timing align. Impulse is expensive. Confirmation is free. Mistake 4. Trading without a stop loss. This is not bravery. This is suicide. Gold can move 100 pips in seconds. No human reaction is fast enough to protect an account manually. A stop loss is your seatbelt, your airbag, your parachute. Every professional uses it. Every beginner avoids it. Only one group survives. Mistake 5. Moving the stop loss out of fear. This is the moment beginners ruin everything. Price goes close to stop loss. Fear activates. And they move it wider. This is emotional trading at its worst. If your stop is hit, you did not lose. You were protected. Your account lived to fight another day. Respect your stop loss. If it gets hit, thank it. Mistake 6. Over-leveraging small accounts. A $50 account cannot act like a $5,000 account. A small account needs smaller lots, smaller targets, smaller expectations. But beginners do the opposite. They take too much risk because they want to grow fast. But fast growth is not growth. Fast growth is gambling. Slow growth is real growth. Slow growth is survival. Slow growth is skill. Mistake 7. Chasing the market after missing a move. This is emotional damage in disguise. You miss a perfect setup. You get frustrated. You jump in late. And the market punishes you. Missing a setup is not a loss. Revenge trading is. There will always be another trade. But there will not always be another account. Mistake 8. Trading news without experience. Gold during news is a wild storm. It's fast. It's violent. It's unpredictable. Beginner scalpers should not touch NFP, CPI, FOMC, ADP, interest rate decisions. Only after you master normal movement should you attempt the chaos of news. Mistake 9. Using too many indicators. Indicators are tools, not magic. Beginners use EMA, RSI, MACD, stochastic, Bollinger Bands, volume, VWAP, super trend, trend lines, support zones, breakouts. Too many tools create confusion. Clarity comes from simplicity. One structure. One flow. One confirmation. One entry model. The professionals trade with less and earn more. Mistake 10. No understanding of liquidity. This is the most important concept beginners ignore. Gold hunts. Buy stops. Sell stops. Highs. Lows. Equal levels. Consolidation tops. Consolidation bottoms. If you don't understand liquidity, you will always enter where the market wants you and exit where the market doesn't want you. Scalping without liquidity understanding is like driving with your eyes closed. Mistake 11. Overtrading when bored. Boredom is dangerous. It creates fake confidence. It creates fake setups. It creates unnecessary losses. Here is the truth. Most of your profits will come from 2 or 3 perfect setups a day. Everything else is noise. Trade quality, not boredom. Mistake 12, expecting fast money. Gold is profitable. Gold is exciting. Gold is powerful. But it is not a shortcut. If you expect fast money, you will take fast losses. If you expect consistency, you will take consistent profits. Your mindset creates your results. Final message to beginners. Remember this. And your entire trading journey will change. You don't need to be perfect. You only need to avoid the big mistakes. Most beginners lose because of behavior, not strategy. But you are learning the truth early. You are receiving protection early. You are getting wisdom before damage begins. You are already ahead. Now that we've protected the beginners, it's time to empower the intermediate traders. The next chapter is Power Tips for Intermediate Traders. How to level up, improve consistency, and trade like a mature scalper. Power Tips for Intermediate Traders, the level up phase. You're no longer a beginner. If you're here, it means you've survived the first stage of trading. You've learned discipline. You've learned patience. You've learned timing. You've learned to stop making emotional mistakes. And now, it's time to evolve. This chapter is designed for traders who understand the basics, know how to read direction, can manage risk, and now want consistency, confidence, and deeper accuracy. Think of this section as the upgrade. The stage where your entries become cleaner, your timing becomes sharper, and your psychology becomes stronger. Let's begin. Tip 1. Master 1 entry model, not 10. Intermediate traders often have a strange habit. They know too much, but use too little correctly. You don't need many strategies. You need one strategy executed perfectly. Whether it's EMA structure flow, break and retest, liquidity sweep then continuation, New York continuation entry, session range breakout. Pick one and refine it until your eyes see it instantly. Without confusion. Without hesitation. This is how accuracy improves. This is how you evolve. Tip 2. Focus on market behavior, not candlestick patterns. Candlestick patterns are not signals. They are only information. The deeper understanding comes from behavior. Why did price reject this level twice? Why did gold fail to break this high? Why did volume increase at this moment? Why did the candle close weak even after a big push? Intermediate traders don't trade patterns. They trade reactions. The reactions reveal the real story. Tip 3. Use liquidity as your compass. Liquidity is no longer optional at this level. To level up, you must identify stop-loss clusters. Mark zones where retail traders are trapped. Recognize engineered highs and lows. Understand fake breakouts. Predict where institutions will target next. Liquidity tells you where price wants to go and where price refuses to go. This will elevate your accuracy immediately. Tip 4. Respect market cycles, not just directions. Gold doesn't just move up or down. It moves in cycles. 1. Accumulation. 2. Manipulation. 3. Expansion. 4. Exhaustion. 5. Pullback. 6. Continuation or reversal. Intermediate traders must learn to identify when the trend is starting, when the trend is slowing, when the trend is over, when the trend is about to reverse. You don't chase trend. You join trend at the most powerful spots. When expansion begins. Tip 5. Trade less, with more purpose. At this stage, discipline becomes precision. You no longer need 10 trades per day. Constant entries. Constant charts. Constant noise. Your results should now come from few high-quality setups. Your trading plan should say, I trade my setup. And if my setup is not there, I do nothing. This is maturity. This is professionalism. Tip 6. Master Session Personality of Gold. Intermediate traders understand something beginners don't. Gold behaves differently in each session. London equals high volatility plus structured breakouts. New York equals traps plus strong directional pushes. Asian equals preparation and liquidity building. You must know when gold moves, when it rests, when it manipulates, when it trends, when it is dangerous, when it is clean. Trading becomes easier when you stop forcing setups in the wrong session. Tip 7. Elevate your risk management. This is where you begin to think like a professional. Intermediate risk rules include fixed lot size, fixed risk per trade, partial profit taking, risk-free trade management, trailing stops only when structure supports it, avoiding trading inside consolidation noise zones. At this stage, your risk management should feel automatic, not emotional, not reactive. You trade with logic, not fear, not hope. Tip 8. Understand when not to trade. This is one of the deepest lessons. Intermediate traders know. Some days are gold. Some days are poison. You don't need to trade during uncertainty, during directionless markets, during chaotic swings, when you're angry, when you're tired, when liquidity is thin, when volatility is dying. 2 minutes before news. Inside unpredictable sideways markets. Being selective keeps your account alive. Being disciplined grows your account. Tip 9. Review your trades like a scientist. This is the difference between staying average and becoming exceptional. Review every trade. Why did you win? Why did you lose? Was the entry rushed? Was the timing correct? Was the structure clean? Were you following your plan or your emotions? Every review removes a weakness. Every review sharpens an instinct. Every review teaches a new lesson. This is the beginning of mastery. Tip 10. Prepare before the market opens. Your preparation affects your accuracy. Before each session. Yes, you know. The direction of the day. The liquidity levels. The key highs and lows. The zone's price must break. The zone's price will likely reverse from. The timing windows you will trade. Preparation turns stress into clarity. Preparation turns guessing into understanding. Think like a warrior. You go into battle with a plan. Not with hope. You've come far. You've survived the beginner stage. You've learned discipline. You've reduced emotional mistakes. And now, you are shaping yourself into a consistent trader. Trading mastery is not found in big profits. It is found in small improvements. Repeated every day. Quietly. Calmly. Patiently. And remember, consistency is not a goal. Consistency is a lifestyle. Remember, trading gold is not about winning every trade. It is about surviving, improving, and consistently taking high-probability trades. Your journey will have mistakes. Your journey will have challenges. But with discipline, patience, and confidence, you will become the trader who wins not by luck, but by preparation, skill, and mindset. Gold will move. Opportunities will come. And now, you are ready. This is your system. This is your mindset. This is your path to consistent success. Breathe. Focus. Prepare. And trade wisely. And don't forget to subscribe for more videos. Thank you.